All right, so welcome back. And in today's video, what I want to do is share with you how to trade an Iron Condor on earnings. So this is kind of a simple example for you. And by the time you see this earnings will be done, but you can always use it for other earning trades. For example, maybe ones that are coming out in the future. So just to give you an idea, how do we trade an Iron Condor for earnings? Stay tuned. I'm going to share with you this insight. All right, so earnings are pretty much a guessing game. I'll let you know that, hey, it is a guess. You don't know what's going to happen with the stock. Sometimes earnings are great and the stock sells off. Other times earnings are bad and the stock pops. I will say and mention that oftentimes if a lot of the earnings have been selling off, then your earnings will probably sell off a little bit as well. They typically behave very similarly, and that's just because of market conditions. Anyway, let's think about where do earnings kind of fit inside of our portfolio. So here's kind of our website, by the way. So this just gives me a screen to draw on. So when you look at earnings, you might have a couple things like in long portfolio, then you'll have some things like in medium portfolio and some speculative stuff. And earnings, I would say, fall into more of that speculative range. Long portfolio is like stuff you make from appreciation. So it's kind of like things you buy and hold. Medium, you might be making it from theta. So this is time. Long is more like delta. So you got like delta trades where you're looking for appreciation, theta-based trades, and then spec is kind of like, hey, your idea, your opinion, that kind of thing. So when we look at earnings and we do a setup, I'm going to do one on JP Morgan. And if you look at JP Morgan here coming out, we've got earnings on the 13th. Now, today's date, if you look at today's date is the 12th. So when we look at something like this, you're looking at, okay, well, let's look at JP Morgan. We're expected to move about $3 or so on earnings here on the 3-day till expiration. You can also see we've got 4.7 expected move and then 34% kind of implied volatility. Now, 28 is kind of the next day. So I'm assuming about, or the next expiration, I'm assuming about 6 points of volatility might come out. So if we set up an Iron Condor, we're doing like 3-day Iron Condor, I want to go plus or minus 4. So what do? I take this number. So I got 165 and then I add 4 and subtract 4. So this will put me at 161 or 169. So those are the ranges that I'm kind of looking at. So if I take off 4, it'll be 161, and there's not a 161, so I could try and go 160. I want to do an Iron Condor, so I will sell this one. Let's just go buy this one, and then above that is maybe 169. So again, you probably won't see that. I've got the 170 on the call side, so I set something up like this. Now, if you don't know how I did that, just right-click anything, go to sell, and then go into. It won't pop up because I got the screen larger. If you go on, let's see, buy, let's try it way up here, buy, there you go. So here's the sell side, and you'll go into the Iron Condor right here. Okay, so that'll give you the Iron Condor. Just right click kind of anywhere, but kind of the ones you want. So mine is off screen right now, and then it'll go to Iron Condor, and then you change these strikes to kind of what you want. I just did it through the selection process with holding the control key. And now I've got this Iron Condor. So basically I've got this range now where I'm good if this thing goes in and takes out a bunch of volatility, because basically this is a volatility crushing play. So what we're looking for is the Vega to just come out of this trade, and you got a pretty fast theta as well. So you're making premium, and you might look to make maybe 60 to 80% of that premium, hopefully, if it kind of stays in that range. Now, if it goes way beyond it, yeah, you're done. And that's why these earnings trades, they're a guessing game. You could lose your full investment. Just be prepared on this. That's why they're more speculative. Now, if you do like 50 of them, a series of them, number of occurrences, then the probabilities get more and more in your favor. But don't put a lot of money into these because they are a little bit more of a guess. So here, what you would do is kind of put this on. So let's say I put this on, and I'm going to put that in my play section. Okay. And once they are on, what you can do is set up a closing order immediately for each one of these legs individually. Analyze a closing leg and analyze a closing trade. And the ones I'm looking for are the ones I'm short. So there's two ways to approach this to close this out. The first way, close the whole thing. And that's usually the best way for most people. The other way, which you could do, is just close the short legs, because those are the only ones you'll get into trouble with. So I could just go ahead and put an order in for that, but you know, that's a little bit more advanced. So stuff we cover more in courses and things like that. So anyway, what you want to do is once you've got this trade order in, I'll right click, analyze closing trade. And now you can see, okay, what am I going to make or lose? At the moment, it's going to be 0 because the trade hasn't really panned out or worked a bunch yet. So instead, what we're looking for is, okay, how much am I really looking to get out of this? So let's say 1 day, maybe 2 will go by then, just of theta, right? I'm just kind of calculating theta. You can't do it by hours here, unfortunately. So somewhere around this, maybe like $10 worth of theta. So let's say that. And volatility will contract, maybe, we'll do a little bit less on here. So between, 4 or 6 points, because I'm looking at 34 to 28. That's probably where it'll go. So let's say about 4 points. So I'll do 2 days of theta, but a conservative volatility collapse. So maybe, 4 points right there. And then what I'm looking to make is maybe about 25 bucks. $25 on 194. So it's a pretty good return on investment for like a 1 or 2 day trade. And what you would do is then put this on and aim for about $24. So then set your price somewhere around here. That'll be 32 cents. And then you create a duplicate order, and I'll just put it in as a good until cancel, right? If it's good for the day, it'll expire at the end of today, but we've got earnings tomorrow, so we want a good till cancel at this price, and then you just get out. Now, what if you could have got a better price? Yeah, you probably then could have. But you're trying to aim for, hey, I'm in, and then I'm out, and it's done. So that's how you would do these trades. And put it back in here. And now that order is going to be sitting there, right there, working for trying to get 32 cents. Now, right now it's 57. We'll see once the earnings come out how that all plays out, and then you kind of go from there. So anyway, that's kind of the general part behind this trade. You're just kind of looking for it to kind of work and kind of close out the trade. Once the earnings released, boom, then you're out and you're done. So I hope that helps, gives you some things to think about and some insight. I would definitely check out our freebies that you could download on our website by clicking the link over here. There's PDFs, checklists, little mini video courses, and much more. If you're brand new to the channel, subscribe to the YouTube channel and check out some of the courses and live classes we have as well, where we go in depth. And some of the courses are, 18 to 20 hours long, specifically designed for those people that want in-depth training and material. Thanks again, and I will see you next time.